As you may know, many Chinese stocks, including Alibaba, have been rising recently due to financial stimulus provided by the Chinese government to support their economy. But is it too late to invest in stocks like Alibaba? Because the stock has run up a lot already. And so in this video, we will answer this question by analyzing the trades of wealthy investors on the last trading day, when the stock hit a new high. Now, if you are one of our members, you may be wondering, why are we making public our analysis of Alibaba? Because this stock was one of our private membership stock picks back on June 17th, when the stock was only trading at $74 per share. This was the video that we shared with our members only on June 17th, when we analyzed an unusual trade worth $4.6 million, these 10,000 call options. And so that is why we went long on Alibaba. And you can see that ever since then, the stock has gone up about 51%. So quite a significant gain if you were one of our members back on June. Now, if you are also one of our gold members, you would know that on July 31st, when the stock was trading around $80 a share, we started taking profits too. And so this was the gold level video that we shared with our members only. On July 31st, you can see we had made 310% with our option strategy. And the stock had only gone up just about 7%. And so option strategies do matter. And so what we did on that day was we managed our trade to lock in profits while staying long bullish on Alibaba, because that is what the data was showing. And so we continued to make profits on Alibaba after updating our trade on July 31st. And so if you want to gain access to strategies to increase profits and better stock picks with a higher chance of profit, not like this one now, when the stock has already run up a lot, and so the risks are actually much higher now in comparison to when we entered the trade back in June, then make sure to go to our website. We'll put a link at the top here where you can gain access to our stock picks with lower risk earlier than others, before the stock rallies up like how Alibaba just did. Now, the reason why there is higher risk now with Alibaba is because now, obviously, the media is talking a lot about it, the Chinese stocks, and also you can see on the data from the last trading day, October 1st, we had 9,998 contracts for these 109 strike puts. October 11th, so very short term. And they're paying $400 for each of these put options. This is very bearish in the short term. Now, for the longer term, we can see here, we have a trade that was being done all at the same time, 5,000 of these. January 17 options, 125 strike calls, 150 strike calls, and the March 21st options, 125 and 150. And so what is going on here? Because this is the same wealthy investor trading at the same time at 11:01 at the 17-second mark. And what we can see is the price that they actually paid here, $7.50, because based on our analysis, they were rolling these trades from the January 17s, closing these out and rolling to a new trade here. And we can calculate the cost of this new trade, where they paid $7.50 for these 125 strike calls, and they sold the 150 strike calls for $3.30. And so we subtract that out, and we get a $420 cost for each contract. And since we know they did 5,000 contracts, we multiply that out, and we get a total trade that costs $2.1 million. Now, as we mentioned, this is still higher risk because of other bearish data that we mentioned on these short-term puts. So in the long term, it appears to be bullish because these options expire March 21st, 2025. And so how did we know that these were actually the new opening trades and not closing trades? Because that is very important to decipher with this type of data analysis. Well, if we take a look at the historical data before October 1st, when these trades were being done, you can see here that on September 30th, before October 1st, for these trades at the January 17 options, notice that at the 125 strike calls, there were 15,000 contracts. And at the 150 strike calls, there was 20,000 contracts. Now, if you take a look at the current data now, we can see for these January 17 options, at the 125 strike calls, we now have less than 15,000, and also at the 150 strike calls, 14,000, which is less than 20,000. So the open interest has decreased, which means they were closed. And when we take a look at the March 21st options, we can see here that at the 125 strike calls, there was an open interest of 1,500. And at the 150 strike calls, we have 2,000 open interest. And so the current data now for these March 21st options have now added to the open interest for the 125 strike calls. You can see now we have 6,900, and also at the 150 we have 7,600. So we know these are the new opening trades. And as we mentioned, because this trade had bearish puts that were being traded at the 109 strike puts, as we can see here, for the short term October 11th, we can see the open interest was only 168 before these trades were made. And now we can see that these trades for the October 11th have now added to the open interest. We now have 10,900 open interest at the 109 strike puts, where they were buying these put options, and that is short-term bearish because October 11th is just 9 days away. But in the long term, we are in this position because according to this data, it is long-term bullish. And so just like this wealthy investor, we are also in this same position. And that is why we have a POS here, which stands for position. Green means buy, and red means sell, where we also bought the 125 strike calls and we sold the 150 strike calls for $420 each, as we had just calculated in the beginning of this video. And when we analyze this trade, you can see that this is a vertical call spread, as the share price, which is represented on the x-axis here, goes up, this becomes more positive profitable. And if it goes down, it becomes more negative loss. Because this is a long bullish trade, and we can confirm it on the Greeks here. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. So we know that this wealthy investor is going long bullish. But keep in mind, there is another wealthy investor who is going short bearish on Alibaba by buying those put options. And so the level of risk is much higher now. If you are interested in lower risk, higher probability of profit trades, then make sure to go to our website. We'll put a link at the top here. let us know in the comments below. Do you think it is too late to buy Alibaba? As usual, please smash the like button, subscribe if you haven't, take care, and have a wonderful day.